Hi guys, welcome to the next episode of Finance Pe Charcha. I just hope that you are loving this playlist as much as we love recording this and getting newer guests for you on newer topics every time we meet. Our guest today is Krishna. Krishna's played multi roles from head of equity to chief investment officer across not just mutual fund but insurance companies in the past, and currently he's a chief investment officer with Mahindra Manulife. And today's topic is going to be the most talked about, most bought stocks. I don't know how do I put this across, but we are going to discuss power stocks today. Allow me to welcome Krishna. Hi, Krishna.
Yeah, hi, Kiran.
How are you?
Yeah, good. I guess all good.
All good, super. The power sector has been doing really great for some time now. Is that helping?
I think power is getting its own right to be there as a powerful sector for market. So
awesome. Krishna, what I'm going to do is quickly switch over to the presentation that you sent us so that you can refer that, and then it is all over to you.
Sure.
Krishna, I am a student today, so I'm going to ask you some silly, stupid, difficult questions. Please don't mind me on that, but I just want to make sure that everybody who's hearing us take the most out of this, because I know when I read through your content, you very brilliantly drafted and made it very simple. But I just want to make sure that people without any background of the sector also understand. So please pardon my questions to you. Krishna, over to you.
Yeah, sure, Kirtan. Thanks, and just to set the context right, a lot of these things which we are discussing day in and out in India about next, 1 year, 3 year, 5 year, 10-year journey, economy moving from the 6th rank to 4th and 4th to 3rd, etc. journey over next 5-7 years. I think the one of the most underlying theme is a lot of these things are virtually impossible if you are not able to get a very basic thing right called supply of power, because all the thoughts of India consuming more consumer durables, India using electric vehicles, Indian companies making manufacturing as a base for global exports, etc. So a lot of things are required, and if you go to the basic economic theory, that everything requires 4 factors of production. Land, labor, capital, entrepreneurship, and I think one thing perhaps missing that time really was possibly power. But in the new world, let's be clear, without a power supply, no factories can run, maybe no house can run, air conditioner or a washing machine or a refrigerator. None of those EVs can get charged. The sources of power can vary. But the need for power, fortunately, unfortunately, remains, A, constant, B, increasing. And let's not forget, coming, the way broad all over India is maybe today versus what it was 10 years back versus 20 years back. We've gradually moved to a place where the intensity of, power shortage is coming down by way of power supply being either regulated or cut in various cities or areas. But let's be honest, we not reached a stage, if you leave aside, maybe top 5-7 cities in this country, essentially the metros, we do hear still there is an intensity of some power cut somewhere. And we know what happens to any economic activity when there is no power, right? Even your normal easiest thing, something in cooking also gets disrupted if power is off for some time. So I think that's a broad thought process that we are moving ahead as a country. Power capacity needs to match up to meet the future demand. And unlike a lot of other products, some part of the power supply chain requires, a longer gestation period, which means unless somebody is planning to create a power plant today, then only that power plant will be ready maybe 2, 3, 5 year down the line or 7 year down the line, depending on the source of power it is. So just to get, that cost, hydropower possibly will take, 7 years to be operational. A thermal plant, maybe 5 years operational. Wind and solar, anything, from 12 to 18 months typically gets ready for operation. So unless somebody is working today to ensure the future power plant capacity available, Because if I look at today's broad picture, and some data from June, July months are very relevant. So India broadly was operating at a nearly 95% plus peak power availability vis-a-vis the requirement, which means somebody somewhere will be deprived of a power requirement somewhere in next 12 months if new capacity doesn't come up. And that's a broad thought process saying that without this interesting thing called electricity power, a lot of other business models can have their own challenges in terms of they might feel actually powerless in absence of power. So if you look from a pure business model understanding, I just highlighted various players in the power sector. You start with there is a power generation companies. Essentially, it can either be central government PSUs or a state government PSUs or a private sector. So some live examples here are something like NTPC, Tata Power, Adani Power. You name JSW Energy. Look at NHPC, SJVN, CESC, kind of some of these listed names which are into power generation. At the same time, there are unlisted players. Essentially, state generation companies are there which generate power, and there will be few private sector power companies which are not listed. Second is power transmission, because power generation happens at one place. It needs to be transferred or transmitted to some other locations. So that happens via some sort of power transmission lines, which again can be either central, state, or private. So largest name perhaps I can think of from a central angle is power grid transmission, which transfers, and there is, let's say, from a private sector, Adani transmission is one name I can think of, but there are many other players again maybe operating in unlisted space, doing the same task, because power which is produced in state A can be and is being transferred to state B, which is maybe 500,000, 2,000 kilometers away for the end power to be consumed in that state. Third part really is the power distribution, which is actually a state subject, where there are few states have done a selective privatization. So we have classic case of something like Tata Power, Adani Transmission, CESC, etc., operating their own distribution arm as a part of their business model. So somebody, let's say in Bombay, will have a power bill typically coming from either Tata or Adani. Somebody in Calcutta might have from CESC. So these are the companies which actually buy power from a power generation company using this power transmission lines. So power is generated at point A, transferred to point B, and from that point B, it is sold by these distribution companies through their own wireline networks to our houses, our offices, our factories, etc., etc. This is what that says. Private sector was allowed to operate in this distribution business, so that's why we have Tata, Adani, CESC. But the relative, it's not opening up as fast enough. There are issues with the moment you have privatization. The efficiency of a private sector in terms of ability to bear those losses of distribution or transmission losses goes down, and somewhere those are the issues we'll maybe discuss going ahead. So that's broadly everything. As far as you and me are concerned, majority times we end up dealing with our distribution company, where we end up taking power, taking service for any issues, and maybe end up paying monthly bills to those sort of distribution companies. I think that's broad gist. As we go ahead, maybe we'll understand a little bit more about how power is generated. So
no, Krishna, very well summarized. Very well summarized. If I have to just take one or two points from what you've covered so far, I think you very interestingly made a point that we are a power deficit state, right? And over and above that, the ambitions that as the government, when we talk about PLI schemes and manufacturing as a hub and EV as the next thing, where is that additional capacity of electricity going to come from to fund the vision that we have around manufacturing and PLI and all of that? You very interestingly, the best part I'll tell you, very interestingly, you helped us understand कि एक कंपनी है जो जनरेट करती है, दूसरी ट्रांसमिट करती है, और तीसरी डिस्ट्रीब्यूशन है वो आपके घर पे पावर लेके आती है. So very simple and very excited to understand about the sector going forward. Yeah.
Another interesting part about power, really, it's very difficult to actually measure the demand for power. In the sense that there are a lot of things which we do as a part of our lifestyle improvement, which conceptually will require more power consumption going ahead. So if somebody does not have an air conditioner at home and he decides to install an air conditioner, suddenly it's a new power demand which comes up.
Right.
It's slightly difficult to model, because there's a lot of interlinkage to power demand which comes from some other sector doing pretty well. So in a way, one way to look at it is power is a lot of latent demand, which is not seen today, not visible today, but one has to believe that as and when power supply becomes, assuming, everybody goes for a 24/7 power supply, every citizen in this country is going to get, you can have a lot of new product demand coming up for other items called durables. Something like refrigerator actually can have a nice demand because when the power supply is assured, people will be able to possibly buy far more with comfort. I think that's that. If you look at, inside of power sector further into how production, etc. happens, so you basically have renewable energy as a source and non-renewable source. Non-renewable essentially is thermal, coal, gas, nuclear, etc. While renewable is basically hydro, solar, wind. Hydro, solar, wind, as the name goes, renewable. We don't consume it. We just use it something and it's available for reusage again and again. While in case of a coal or a nuclear gas, etc., we end up consuming that particular source, and to an extent, it creates its own chain of someday there is a end date for those resources can happen. From a consumer side, typically you have customers which are agriculture usage, residential usage, commercial usage, which is essentially hospitals, malls, etc., offices, and industrialism, manufacturing units, and the distribution firms are there. Historically, agriculture has been a sector which has been heavily subsidized by various states, while residential is subsequently the intensity of subsidy reduces, but still there is subsidy for residential, while industrial and commercial, they end up bearing a reasonable portion of, higher pricing, because net the distribution company, which is selling the power, has to make its own share of profit. So they somewhere, in a way, charge some people more than what the cost is. Some people are being charged less, and that's where they balance their books. As I said, the free power is part of state rules, regulations, and we've seen enough examples of, free power being one of the relevant, items we see in Code of Election manifestos nowadays. So that is there. If you look from a power, how it is sold, power plants are typically made for a 20, 30, 40 years kind of life. And to an extent, the power plant is sold via some long-term purchase power agreements. These are all random numbers in the sense that numbers may be off by a couple of percentage here and there, but net, maybe 85-90% of power is sold via some long-term PPAs, because the nature of the beast requires both the user as well as the producer to have some stability in their business model. And the remaining 10-15 is sold in spot market or through very short-term contracts. The entire sector is in a way regulated. Yeah, sorry, Kirtan.
Krishna, if I may ask you here, when you say long-term power purchase agreements, do I get this correct that the generation company who's generating the power has this contract signed with the distribution company, which means that out of 100 units of power that this production company generates, he'll end up giving 85% to this distribution company, and the remaining 15% can be sold in the short-term market. Does that really mean this?
Broadly, yes, but at the same time, there will be some companies, some entrepreneurship, which would have taken the commercial risk of setting a power plant without having a PPA. So not that each and every power plant will have this 85-90% kind of PPA back. Some people might have, in a way, very low PPAs and very high, open to customer selling. But broad mix for the country is something like this.
Sure, got you. But I was just reading somewhere lately. Lately, it has been allowed from open access. I think it was your note only that I was reading. Open access where the end consumer, specifically the commercial and the industrial guys, can directly source power from the generator without the SEBs, right? Or without the transmission or the distribution company. And does because of this, the long-term power purchase agreements will fall over a period of time?
Need not be, because it just it will change to some other name of the supplier or the customer. So for example, the same customer, who opts for this open access, he will in a way stop buying from the particular state distribution company. But the same customer also has a very high dependency on the new supplier.
Yeah.
So it will be in the customer's interest to ensure that power comes from some XYZ company instead of the state distribution company, because if you do not have a purchase power agreement, that the industrial unit can actually have far bigger implications for business than otherwise.
Absolutely.
So to an extent, as you maybe I've written somewhere, there is a high interdependency on both sides. High capex for a producer requires some commitment.
Correct.
And the high implication of lack of power requires a reverse commitment from a customer.
No,
So I think that's
very, very rightly put, because unless the power generation company does not have a guarantee that they are going to be able to sell this and at what price, and again,
yes.
at the end, consumer does not have the confidence that they will continuously receive the power source, it is going to be a business disruption at either of the ends, depending on whatever turns out.
Yeah.
So I think which is why the long-term agreement, where this guy, generating guy, also says that, I will give you power at this price for the next 25 years. And he is also convinced that power milte rahega, koi tension nahi.
Yeah.
Okay, got you. Thank you so much.
And very fact you get into these long-term PPAs, the biggest dispute happens is a price, right? Because the quantum is committed, not the price. So there is this regulator called CERC, which typically has some formulas which for PPA pricing, which basically says that price of power can be changed almost every day or every month or every year based on some formula. And that formula says, the generation company can pick up variable expenses broadly on actuals and fixed costs, which are more or less, predetermined based on how the plant has been constructed. So if you are a manufacturer of power, you are a power producer, you have a capex done, which capex needs to be recovered through interest and depreciation for allowing, servicing the cost as well as repayment of principal. So that's the fixed cost recovery, which is broadly fixed up by the regulator through a formula. And variable expenses, because it's very tough really to set a rule for what will be the source of fuel, the price of the source of fuel in next 10 years down the line, etc. So those variabilities are inbuilt. So you set up a thermal power plant today which is using thermal coal, there are rules of what sort of pass through of a coal price hike or reduction in future can happen or will be allowed to be done, while the fixed cost is pretty much same in terms of interest, depreciation. Even interest for that matter is slightly regulated in the sense that it's not a fixed rate of interest. It does vary based on how the prevalent interest rates in the system are a little bit linked to some benchmark, either some bank, let's say SBI led benchmark or some external benchmark, the repo, etc. So that happens. So the CERC is basically interested in saying that I need to get some bare minimum ROE for any power firm, which is either a generator or a distributor or a transmitter, so that those people are able to be interested in the business. So some minimum earning comes in, whether the number is 14.5%, 15.5% kind of range is what originally the number was. Let's see, that number keeps on changing every 5 years, and 2024 is the next reset year. So somewhere in April, May 2024, we're likely to get the new number for next 5 years. Idea is, the current understanding is that the draft guidelines will come out in next 2-3 months, after which some discussion etc. happens and the formal notification happens. We'll come to know what exactly the regulator is thinking about. Is there a need to increase the ROEs for power companies, or is it to reduce the draft paper? What has come up till now, sir, is that they are also cognizant of power companies needing to make far more investments going ahead than what they've done in past, which in turn means that they might be open to give perhaps slightly better ROE profile than what historically was. But these are all something subject to what actually comes out later on.
Krishna, so if I have to simplify this, and correct me if I've understood. So
Yes.
NTPC, which is the power manufacturer, has a contract with, let's say, Mahindra and Mahindra Auto, right? Who's the consumer or the end customer. Forget about the distribution and the transmission at this point in time. So we're saying
Okay.
NTPC has a long-term 25-year contract with Mahindra and Mahindra at a fixed price, let's say 10 rupees per unit, hypothetically, some random number, right? Now, this
Yeah.
10 rupees per unit is derived by this regulator CERC, saying आपका इतना खर्चा है, उसके ऊपर 15% रिटर्न ऐड कर दो तो इतना प्राइसिंग करोगे, मोटा मोटा. I'm sure I'm not.
Yeah, मोटा मोटा.
Yeah. So that pricing is fixed between both of these entities. And then the regulator CERC says that, yeah, I understand that the price of the coal or something will keep moving up and down, up and down. So you can't commit a 25-year price. So I will allow you to make those small changes depending on the variables that might change. So if your interest rates have gone up, price of the coal has gone up, so I will allow you to increase the price to a certain extent. And this is done every 5 years. Mota mota, have I understood? Well?
Yeah, I think it's perfect. I mean, I'm sure you put it as nicely as what I could have thought. Only area I can add is that this is true whether it's a end user is a buyer called Mahindra and Mahindra factory or a distribution company which is owned by the state, etc. But otherwise, it's absolutely same. Those rules are in place so that everybody's happy with some sort of a committed not only power supply, but some sort of lack of any arbitrariness in the pricing on both sides. So nobody in a way is exposed to any vagaries in a way.
Super.
It's a different thing that if tomorrow coal price really shoots up, definitely somebody has to pay. But the point is, it's not an extraordinary profit or loss for the generator company. It is a pass-through mechanism, as a technical word goes.
Got
so
you.
another
Could have been even
relevant
simpler.
part. Yeah.
Awesome. Got you. Thank you so much.
Yeah. So let's say once you understand, maybe this generation philosophy business, the next is the distribution side, and historically, a lot of anecdotal read through we would have done where we said, okay, there is a shortfall of number of units built versus number of units produced, etc. Sold versus built, let's say. So that number used to run pretty high, maybe anything 10 to 30%, depending on which state we are discussing, depending on which city we are discussing. There are many factors historically. So one of the factors actually has been that people are able to have a theft of power because sometimes the grid infrastructure is pretty weak. In a low voltage, one can easily try and do some power theft or steal the power from the grid kind of thing. Sometimes the meter reading was not accurate, so there was two combination. One combination really was that the number of units were lost in transmitting itself. So point A to point B. The one part maybe I can mention is that where there is a generation to distribution company, transfer happens via this transmission line. But even within a distribution company, when they get power at a particular large place, they need to sub-distribute to multiple areas, and for each of these areas, you need this entire complex system of there is a substation, and the substation in a way divides and allocates that 100 units of power which they've got from generator to some, let's say 5 different areas of maybe 18, 20, 22 units each, and then subsequently they are sold to customers in those billing areas. Now, sometimes, you do end up losing some 2, 3, 5% in transmission at times. It's not really partly lost, partly is theft. And after it, all that is done, when it is actually sold to customer by this last mile wire line to our houses, you still have a challenge, where the billing inaccuracy, maybe some people were tampering with meters. So net, what was happening was there was 10 to 30% loss of power units in terms of billing versus generation, and that made the state distribution companies, which were basically buying 100 units of power but able to realize only value for 70, 80, 90 units, were actually running into losses. That issue perhaps has now gone to advanced level of solution where government has gone through the process. They've picked up loopholes. So there are two issues. One issue was to improve the grid quality by replacing the existing grid infrastructure with something better, where the ability of loss or ability of theft goes down. Other is appropriate billing or actual measurement of this meter, this electricity consumed happens, which is in our case a new solution has come up in this, in India. Basically, it's called smart meters. So now if you go to this, a lot of headlines of last 2-3 years in media has been focused on installation of smart meter at, I'm using approximate 25-27 crore households in India. So government ideally wants almost every household to go through a smart meter, and the best part of smart meter really is that it doesn't even require somebody to come and read the units at your home, right? It can be done digitally. Sitting at the standard office, the system rate itself, there's no need for a check, recheck, etc. I think those things are happening. With the consumption, with the improvement in both the distribution network as well as smart meter, one can actually expect this shortfall to really go down further and further. And the best part about this is that the same CERC formula which works for generation companies works even for distribution companies. So as the collection efficiency improves, the same distribution company will be in a way forced to reduce the cost of power to everybody. So if you're losing 30%, let's say, the remaining 70% people pay the bill for 30.
Right.
If you lose 20, the 80% will pay for 20%. And as you keep on going down the curve, you may realize that 95% people will have to pay only for the 5%. So which means the numerator falls much faster, denominator goes equally. So in a way, that subsidy or the unbilled power unit loss keeps on coming down by way of a lower price per unit for a consumer. So that's that's a nice formula where a lot of this efficiency actually can be transferred to the right side of people who've been paying on time, rather than people who are not paying on time. So I think that's something happening. Smart meter, while we speak again, numbers can be off here and there, but broadly I think India has managed to do something like 4% smart meter installation till now. Which means around 1 crore would have been. So there is actually a site which live tracking of number of smart meter installed in India is actually, that site is available. So idea is simple. We are moving to that path. Quite a few companies are engaged in that business model of installing smart meter as a third party provider to distribution companies. So you have companies like Genus Power, which recently got some order, and maybe some other companies like HPL Power. I think some company of GMR, Power and Infra. I think that also got. There are quite a few companies. There's just some names more for reference rather than anything. It is obviously we're not discussing the recommendation on stocks, but these are the companies which are engaged in that business, and they will possibly have this opportunity to keep on supplying as and when this we reach that milestone.
Very interesting. I can tell you, you made it so simple for at least me to understand, because I never knew that NTPC generates 100 and it sells 100 to, let's say, a power grid. In that transmission, power grid probably receives only 90, and then when power grid is trying to sell it further down, there is theft, and what is actually getting sold is only 70. So power grid buys 100 but earns only for 70. So people who are genuinely paying, I think I made some mistake, but I'm just going to complete it.
Just to add, honestly, it's very difficult to for power grid transmission to lose power. It's because that's such a high voltage that nobody can even dream of stealing it from there. So that number is almost as good as 100.
Okay.
More towards it's only when the intensity, or when you move from very high voltage to low voltage, that's where some of these troubles start. But broad principle is same. Something is lost in carrier, depending on the efficiency or the capability of the carrier network. Sometimes nothing is lost, sometimes something is lost.
Super. Thank you so much. I have learned a lot about power today that I definitely did not know about.
So coming to the same principle, some distribution companies were not viable, because if you keep on buying 100 units and sell only 70, sell means realize money only for 70, there were issues. So there were all these issues were creating a problem on the balance sheet of these companies, because you continuously keep on making losses, and moment you keep on losing money, you need to borrow money to pay. You can accounting wise keep on losing money, but in practical terms you have to pay for your power purchase. So I think those things were happening. They were borrowing money. There was theoretical risk of NPAs, etc. Practically is not happened, but theoretically those risks always, all this comes in. So some of this can be resolved by, this smart grid meter and, better quality grid, where if you start increasing the number of collection units, then the primary issue is addressed. I think going ahead, the second part, of India's story, which is what actually I started with on power, is India needs a lot of power.
Yeah.
Okay, so because if you're operating at full capacity and we want to, let's say, increase from manufacturing, our share of manufacturing in the world right now is what, around 2.5% of GDP, of the world GDP. We want to move to maybe 4, 5, 6, whatever the new number, new aspirations are. Very fact, we are replacing some import in India by a make in India. Also require the same thing. Look at logically, like today, if you're importing something from China or Germany, essentially that particular product was made in China or Germany using German power or a Chinese power company supplying some units. The very fact you want to make that particular piece in India, you need some Indian company to step up to supply the power. So the quantum of power required for that piece doesn't change just because it is made in India or China or Germany, but you need that power supply to happen to India. You cannot get power from China or Germany. So you have to have, power units being produced and sold in India. So I think those things are required. In absence of that, we won't be able to get FDI also in the country. Because if your own stated statistics says there is a expected power deficit next year down the line, any long-term investor who's setting up a plant in India for next 20, 30, 40 years, he will be obviously worried about, why should I come to this particular country as a macro, or maybe a particular state, because state, it being a state subject power. But they will obviously pick and choose their choice of state rather than going to state A where the power supply is slightly erratic or the future power supply equation is not so great. They will actually choose something else. And as we know, today all states are in a nice competition with each other because they want to showcase two things. One is they are progressive. Second is they want jobs. So if you have a power manufacturing unit, job creation happens. I think those things, are actually interlinked very nice. It's like interlinkage of demand supply which is coming up. So it's one particular area which is interesting in the Indian context really is, in the world context maybe also, is this ESG, which we heard a lot, and one of the variable for ESG really is the thermal coal is historically seen as something which is polluting the world.
Right.
So incrementally what's happening is solar and wind are getting attention, but the challenge really is that a thermal power plant can actually operate for maybe 90% kind of times, right? It doesn't really have an issue as long as the coal is available, plant can work. But something which is a solar plant or a wind plant cannot really work with same efficiency.
Right.
By nature, solar means you cannot have at least minimum 12 hours off is a given, or maybe 16 hours off is a given based on the climatic condition. Right. Same is wind. Not every part of is never going to be uniform. So the plant utilization levels are pretty low. In a solar and wind, maybe they drop quite drastically, depending on how best one is able to utilize. You still have a challenge where for example, in a way, macro stats is that for every 1 megawatt of thermal power plant, you might require something close to 4 megawatt of solar plant to have the same end output. Because 1 megawatt can operate at 90% utilization, while those 4 can operate only at 22 kind of number, effectively. So I think those things are there, which requires different kind of investment going ahead, because the world is moving towards renewables. So even if you look at our own policy, maybe I think I've covered maybe in the next slide, but if you look at it, we got something like 300 gigawatt of power plants to be installed, let's say in next 5-7 years. This is just 5-7 year data, it's not beyond that, and that will typically cost anything from 18 to 20 lakh crores. Because you look at it, solar, wind, like typically a wind installation might cost something close to 7 crores per megawatt. Thermal might be 6.5, 7. Solar might be reasonably less, maybe more closer towards 3.5, 4 crores. But net an absolute number is so large. So if I could just give a color to it, this 300 gigawatt of power broadly will come something like 38-40 gigawatt from thermal, something like 58 gigawatt from wind, and maybe more towards 200 coming up from solar.
Oh,
So to an
wow.
extent, that's going to be the broad mix of and people need to invest money for some of this project. People, as in the generating companies first, and let's not forget that for every power which is produced needs to be evacuated, which needs to be distributed, right? So if you're going to double our not really double, but maybe 60-70% higher uh, power generation 7-8 years down the line from what it is today, you will actually have a situation where the entire ecosystem of power transmission, power distribution needs a similar investment. The quantum will vary, obviously quantum will not be as same as this, but at least you need those transmission lines. The existing transmission line cannot really take more power than what it is built budgeted for.
Krishna, did I hear this correct? You said that the newer requirement of 300 gigawatts, largely 10-15% will come from thermal, 20% will come from wind, and close to 70% will come from solar. Over the next 6-7 years, we are expecting such a big transition to cleaner energy than the way we are currently operating. Did I hear that correct?
Yeah. So this is actually part of a lot of documents. National electricity policy also says something very similar. In a way, this also aligns with what government of India has been saying and thinking about transition towards net zero. Like for a country like ours, today cannot suddenly go to renewables as a primary source. It's only the incremental mix which moves more towards renewables, so that over next 10-20 years you actually move where renewables as a share keeps on going up, and at some day actual output of a renewable power, which is wind, solar and hydro combined, might overtake the output of a thermal. So that's the end game where
Krishna, I'm not sure if and how comfortable you will be to answer this, but I still want to ask you. Look, there is such a big gestation in the manufacturing or the transmission or the distribution business. There is so much of capex, right? But if we are envisaging that India is already short of energy, it is going to increase over a period of time. We have huge manufacturing, PLI, EV ambition. Then power ancillary, isn't that a better place to be than being on the distribution or on the power generation side? I'm touching upon this point because you did make a mention in the last slide of some ancillary business.
Yeah.
So I was just very keen to hear your thoughts on that.
Clearly it's the entire value chain. So for example, in a normal a value chain, who are the players, let's say. So one is power generator, which is in our language we call it the developer. Okay, one is the developer. The second is perhaps the distributor. Third is a limited set, but yeah, still transmission lines. I think those are the three.
Wow.
But for each of these three guys to operate, you have the entire ecosystem starting from the easiest the bare minimum small system is availability of money, which is financial. So you got an ancillary, which is somebody who's willing to finance some of those power plants. If you look at this absolute amount of 18-20 lakh crores, it requires anything between 12 to 13 lakh crores worth of loans being given. So you got your ecosystem of a PFC, REC, which are specialized power companies, or you have an ecosystem of some banks stepping up, some global multilateral body coming up to give power. So that's one ecosystem. If you want to create a thermal power plant or a wind power plant or a solar, you need people who will supply power plants. So got that ecosystem of a thermal plant supplier or a wind turbine supplier or a solar panel supplier, etc. You got EPC companies which will help create those plants by which is the actual physical work of getting it done at the site. You have similarly companies in the transmission lines. I'm just using some names again. These are all pure names of the companies, but something like
So I was just checking if you could name a couple of them in the value.
Yeah, sure. These are all names of company engaged in those businesses. We're not recommending any names, but yeah, you got KC International, Kalpataru kind of players in this power transmission line setting up role. You got companies like BHCL in the thermal power plant supplier. You got similarly, maybe Suzlon, Inox Wind kind of players in wind turbine equipment, etc. I think those are the companies' names are quite a few, quite a many, and you also go into people who supply cable, and let's not forget, when all this power is produced and consumed, you have much wider ecosystem of cable companies,
Yeah.
of consumer durable companies, which will finally benefit something somewhere. I think that's the overall ecosystem. You cover everything, in a way through power as a bare minimum requirement, which comes up.
Superb, superb. Thank you so much, Krishna.
Yeah. Well, thanks, Kisan.
Yeah, I think something that a lot of people will be interested in knowing, what do I look for in a power stock?
Yeah. So I think what to look for in a power stock, I think the basic principles of stock selection doesn't vary.
Yeah.
You have core principles: A, the management quality. So what sort of promoter is backing this company? What's the growth potential for this particular company or the sector? What's the cash flow characteristics for this business? And fourth is valuation. So if I look at Mahindra Manulife, we basically look at this GCMB framework: growth, cash flow, management, valuation. I think anyone can try and analyze these companies into these four quadrants. I think growth is slightly easy. Each of these companies have their own growth path. If the with a 20 lakh crore kind of overall capex cycle, and I'm just using only the generation side.
Yeah.
If you add distribution, if you add transmission, maybe the numbers can become significantly higher than that. It won't be 5-10%, it will be maybe more towards 50% higher. I think that ecosystem is in place for growth. What is required is C for cash flow, C for capital, and that's the second variable. So perhaps choose a company where you believe this company will be able to access capital from markets, because there are a lot of companies we see in where the opportunity for growth is there, but unfortunately their ability to access capital to satisfy that growth channel is, because for every 1 rupee you want to borrow from a bank for the purpose of creating a power plant, you will be required to put up something close to 40 paise kind of as a capital. That's how a bank will basically lend you money. Typically many of these projects go with 70-30 65 kind of debt equity funding. So if you want 70 rupee from bank, please put 30 rupee on the table, which means you need capital.
Sure.
Macro picture is same statistics. If there is a 20 lakh crore, let's say hypothetical number, which is the total capex required, you need close to 7 lakh crores of equity capital and 13 lakh crores of debt capital. But that debt capital will not come unless you generate that equity capital. So your ability to raise money, your current leverage obviously helps. Existing projects which are operational profitability helps, because that will in a way finance future future capacity creation. And the last part is valuation. I think luckily valuations are reasonable for some of this stock, because some of these companies are coming from a 5-10-15 year of some sort of a consolidation, maybe some sort of a hibernation from market side. These are the four frameworks one should look at it essentially in choosing a stock in power sector.
Krishna, maybe a laymanish question, but I still want to understand. In power, do you look at EV by EBITDA or price to equity?
Sorry, one is EV by EBITDA, second is
price to equity. I mean, do you look at the PE ratio in terms of?
Yeah. So I think normally normal understanding is price to book is a very good approximation, because you're talking about some of these companies setting up plants which are going to run for 20, 25, 30 years. Stability of business model, predictability on both sides. You're not going to have extreme variations on business sides. I think price to book historically has been one of the best way to judge power companies. When they were not in a growth phase, maybe dividend yield was a good option over and above price to book. But now that this entire sector is moving into a growth trajectory, you can actually look at price to book as a primary way. And we view historically at cases where some of these companies would have been rated, not rated but traded 3 times price to book, and maybe now still are available at 1.5 kind of range. So that entire range is there.
Interesting. So we spoke about growth, which you said is a given. You said second was their ability to
Cash flow, capital, yeah.
ability to raise cash and whether there is operating cash flow, free cash flow happening or not. And the third is whether they are available at reasonable valuations or not.
Yes.
Interesting.
Management ability
Oh,
to
yes.
execute.
Yes. Yes. Awesome.
And valuation. Yeah.
Perfect. Perfect. I'm clear. Right. I think there is one more point that no, I think we've spoken about the smart meters and
Yeah.
open access. But if at all you want to run through it, because I know about it because I've read through your note.
It is something very interesting. It just came up as some sort of announcement by center, which says they move into a model where customer can offer a differential pricing for power based on the time of the day. So if you consume power at morning 10 versus afternoon 1 o'clock or evening 5 o'clock, maybe the power price per unit can vary. It's a new concept. Obviously, this concept requires smart meter, because if you want to introduce this, ability to read has to be far more digital than analog. So government is trying to on both sides. On one side, they are looking at installing this smart meter, which will meet the dual objective. One is customer get their own ability to use as per their requirement, and second, equally powerful, is the pilferage or the theft part, or unbilled amount can be reduced. It's perhaps a nice effort to in a way incentivize customers to say that you can benefit if you install a smart meter.
Krishna, one last question before I let you go. Again, you can choose not to answer because I'm not sure if you can go stock specific. But I really wanted to understand the market coupling problem in the IEX. I mean, it was so much hyped on the social media, and then suddenly the market coupling came in, and now, if I understand the problem correctly, we are saying that the regulator is saying that there are 3 exchanges, we'll club the pricing on all the 3 exchanges and then come up with the market price, which was actually the moat of IEX, right? Because of the volumes that they were doing. What's happening with IEX? I mean, please feel free not to answer if at all that does not fit into what you can do, but I was very interested in it because it's a very
and
social media popular stock.
Yeah. So thanks, because your question had the answer, choose not to answer. So I guess that's something, we can specifically skip, because it's slightly more specific to companies, slightly more specific to, stock price rather than, the business model side of it. So I think that we can maybe skip. Yeah.
No, I understand. But Krishna, I have to really tell you, while of course I understand a little bit about the power sector, I think there were a lot of nuances that you covered today, which I'm sure, like I have learned, a lot of our listeners will definitely learn, and you were brilliant at it. I mean, I've done some 6-7 episodes, and your simplicity came across very well while you were trying to explain the power sector. So on behalf of everybody who's going to watch this video, a big thank you, Krishna, for making the power sector so simple for all of us to understand.
Well, thanks, Kirtan, and it was definitely fun, discussing something which I believe really is the core for India, for next maybe 5-10 years.
Superb. I'm just hoping that we can get you on the show to talk about some other aspect in some other sector some other time. But Krishna, thank you so much for all your time, and you were brilliant. I loved and understood a lot about power sector. Thank you so much.
Thanks, Kirtan.